Larry Fink, the CEO of BlackRock, drops an absolute bombshell, but it's really, really bad news for Bitcoin. He talks about how inflation isn't going to go down in the next 6 to 9 months. That also means we won't be seeing any interest rate cuts here, or only to a very, very small extent. And that means Bitcoin could potentially face a lack of liquidity here. We're going to take a closer look at Larry Fink's statements in detail. He just dropped a new interview and made some really interesting assessments about the overall market. We also see the head of the European Stability Mechanism issuing a warning that Donald Trump's pro-crypto stance could threaten the European or monetary autonomy in the EU. That's an absolute game changer. This means that the EU is going exactly the opposite way to the USA. The US is opening up to Bitcoin in the EU. Hey, this is bad for the euro. This is bad for the EU system. We could now lose our monetary autonomy. We're going to take a look at what this is all about, but first, let's actually turn to the CEO of BlackRock, the largest asset manager in the world, Larry Fink, who is now really leaning towards a bearish stance. What I mean is, he's definitely making a statement that's really, really bad for risk assets because the Federal Reserve always focuses on inflation. That means the central banks are always looking, okay, what is inflation like right now? Do we have inflation under control, or do we not have inflation in the GR? If we don't have inflation under control, then we need to raise interest rates. If we have inflation under control, then we might consider lowering interest rates to stimulate the economy. And now we actually have the info. I'm reading this to you straight from Watcher Guru, just in. Larry Fink here says that in the U.S., higher inflation is expected in the next 6 to 9 months. So he's not just saying that inflation will not go down, he's saying that inflation will go up. And that actually makes sense. I have to quickly put the key down here. That actually makes sense, because we now have the whole customs issue, and I have already told you this, all the customs duties, it is all inflationary. Sure, in the long term the USA may benefit from it, or we don't even know for sure whether the USA will benefit from it, but the whole thing is inflationary because the companies have to add tariffs somewhere. Then there are stories like energy prices, where Donald Trump always says that he wants to bring energy prices down, but if he doesn't manage to bring energy prices down, then that might be an inflationary factor here too. There are other inflationary factors that we don't necessarily have to go through all of today, but Larry Fink is definitely in the camp that says, okay, no, inflation will not go down, but inflation will continue to rise. And that also means that it's not going to be like the Federal Reserve says, because in their last or the one before last central bank meeting, they said, inflation was actually declining, and then suddenly inflation wasn't declining anymore. It shot back up. The market reacted very, very shockingly to that because last year, the market was anticipating maybe 2 or 3 interest rate cuts this year, and now at the beginning of the year, the market suddenly realized, oh crap, maybe there won't be any rate cuts at all. And what happens if we don't have any rate cuts? Then risk assets like Bitcoin and so on are going to have a really tough time, and that's why you can have as many bullish factors as you want. So all kinds of bullish factors can happen, strategic Bitcoin reserves and whatever, but as long as interest rates don't go down and as long as there is no fresh new money, then Bitcoin will always have a very, very difficult time. And on the other hand, if we don't have such bullish news, but the liquidity is just top-notch and we're printing money without end, then Bitcoin and other risk assets are doing very, very easily. So, right now, there's definitely a sentiment in the market where people are more in a risk-off mode, leaning towards safe investments like gold or bonds, and they really aren't that interested in tech stocks or Bitcoin. I mean, things can change pretty quickly and so on, but now let's take a look at another statement from Larry Fink, which is also very, very important and not bearish at all. In fact, it could really send Bitcoin to the moon in the long run. So, what's happening is that we have short-term issues, but Larry Fink is also confident that in the long run, Bitcoin will prevail. And this statement he makes is ultra bullish for Bitcoin in the long run.
Don't have enough. So, I've even told members of the Trump team that we're going to run out of electricians as we build out our AI data centers. We just don't have enough. So all of this is going to just have embedded inflation in it. But over the course of the next few years, my belief is we're going to have big deflation because of the advancement of AI and robotics and how that's going to reshape the economy. So, short-term inflation, short-term issues, but the long-term, I think we're going to see a real change in the long-term makeup of where inflation is going.
So he says that in the short term, there could still be inflation. This is just in addition to the statement where he says that inflation could still rise in the next 6 to 9 months. But in the long run, he sees that, and it's important to add, he's saying that there's a shortage of workers, electricians, and whatever. And that means that the costs for production are going to rise for certain things, simply because wages are going up, and then those costs have to be passed on to the products. So, basically, production costs are going up. Next, the prices of products in supermarkets will go up, and that will reflect back to you in the form of inflation. But in the long run, he says that due to technological advancements in AI, prices are going to drop so massively that it's almost hard to imagine, because everything will become much more efficient. Things that used to cost double to produce can now be made for half the price, and so on. And that's what I've told you time and time again, that AI is the absolute price driver here for Bitcoin. If we ever reach a world where we can produce everything much more easily, where we truly live in abundance, where we can create things at almost zero cost, where we used to pay hundreds of euros for something that we can now get generated with a click of a button by AI, like checking documents or automatically generating something or whatever. If we get to that point, then it's going to be massively deflationary. And then, when we have such a world of abundance and live in such a deflationary world and everything is very, very simple and very, very cheap and very, very efficient, then people have to store their values somewhere in something that cannot be made infinitely more efficient. Let's say, that cannot be produced infinitely more easily, and that is precisely the factor with Bitcoin. So, no matter how deflationary our economy is or how advanced we get technologically, Bitcoin can't be produced any easier or mined any easier, and so on. We still need energy and time to bring new Bitcoin into circulation here, and that's why in a world where we live in abundance, you ought to have things that are absolutely limited, and there are, for example, gold, but what's even more limited is definitely Bitcoin. And that's why what Larry Fink is saying is a short-term bearish statement, but a long-term ultra-bullish statement. And Larry Fink is also aware that Bitcoin can benefit during times of turbulence and so on. That says itself that it is a flight to quality, and in the long term, BlackRock is also very convinced of Bitcoin, and they are continuing to develop their product range, which they are now expanding with their model portfolios, and who knows what else they are offering. There's definitely more to come. But we can see that BlackRock, even though there might be some turbulence right now, is still bullish on Bitcoin. You can't directly see it in the statement that Larry Fink made about inflation, but by offering new portfolio options, like the model portfolios that now include Bitcoin ETFs, it shows a shift. And then we have a second story here that we also need to take a look at, which fits in with this. So, we have the head of the stability mechanism. In Europe, I have no idea what it's supposed to be. Stability mechanism back. I actually Googled it here. What exactly the ESM does here? The ESM was founded after the Euro crisis in order to be able to better manage future financial crises in Europe. The head of the ESM is therefore a central figure in the economic policy management of the EU. He's definitely been shooting down Bitcoin in the EU for a while, but now he's issuing a warning that the proactive stance against Bitcoin and crypto could be really bad for the monetary independence of the EU. But it's not just about Bitcoin, it's also about stablecoins. That means that there is always something that is sometimes mixed up. I don't even know if he knows the difference between Bitcoin and stablecoins. That was also what Michael Saylor recently presented, and Donald Trump suggested in that one paper where he says we need to buy 25% of the Bitcoin network. He made 4 distinctions, for example. There are stores of value, there are stablecoins, there are tokens, there are all sorts of other things. I don't remember exactly what he divided up, but that's the mistake that people often make. They just throw crypto, Bitcoin, and stablecoins into one pile. And yes, it is true that Bitcoin, let's say, can definitely undermine the stability of the euro, because if all the people here in the EU are bundling massive war packages and printing money without end, then people will seek refuge in alternatives, perhaps in the dollar if the dollar is more stable, but also in Bitcoin, and then that can definitely be a danger. And in addition, the EU is also scared because of the stablecoin story, and that is also what Scott Bessent, the finance minister in the USA, said very clearly. Hey, we want to continue to be the dominant world currency here. We want to continue to be the reserve currency here in the world through stablecoins. And we've seen for a long time that the US dollar has really been on the decline, like a falling knife, and I've always been pretty bearish about it, thinking, okay, hey, the US dollar doesn't look good at all. Fewer and fewer people are using the US dollar. The Chinese are dumping the dollar, selling off treasury bonds, and other big nations are doing the same. Plus, Biden has frozen Russian assets. I thought that was really the death blow for the USA, because it led to a complete loss of confidence in bonds on the international market. But what we're seeing now is that the US is refreshing itself, bringing down the annual treasury bonds through the Department of Government Efficiency because the deficit is decreasing. This means trust is coming back into the US dollar, and they might even try to back it up with hard assets like gold and Bitcoin, which could definitely happen and would give further confidence in the US dollar. And now here comes what the EU or the EU representative is saying. That stablecoins could also threaten monetary sovereignty in the EU. Because if the US heavily invests in stablecoins, essentially exporting the US dollar worldwide, everyone will have access to the US dollar, and with stablecoins, digital representations of the US dollar will be created, which would significantly increase demand. I mean, Tether is already one of the largest holders of US Treasury bonds, and if this keeps up, it could actually be the case. But the US can continue to support its world reserve currency through the existence of stablecoins, and you can't underestimate this movement. This momentum is going to get a lot stronger in the near future. A lot of people think that the whole pro-crypto and pro-Bitcoin thing is somehow related to Bitcoin or something like that, but it actually has a lot to do with stablecoins. The whole stablecoin story, I tell you, that is much more relevant here for the US than Bitcoin or no Bitcoin and so on. That's a cool story. They're taking that with them, then they're also taking, let's say, the first move advantage with them, and that was also a cool story with the reserve asset and so on, or that we're now setting up a strategic Bitcoin reserve here. Now I have to make sure that someone doesn't run me over. I almost got run over on the street. Here. But just managed to get through. Yes, definitely the stablecoin story will become very, very relevant, and that is also something that the EU will probably not be able to achieve, because a stablecoin in the euro makes relatively little sense. A stablecoin makes more sense in the US dollar. Because why should I get a euro stablecoin or something like that on the international market if I am a trader or if I am in some country or something like that? If I'm getting a stablecoin, I'm definitely going for the one that's the strongest, and the strongest stablecoin is definitely the US dollar. I mean, the US dollar is also the most popular fiat currency and all that. It's often a winner-takes-all kind of deal, or yeah, you could say it's a winner-takes-all situation. So, it's not like 3 stablecoins are going to come out on top. It's very likely that there will be one major stablecoin, and right now, that's Tether. And yeah, that has its risks because it could lead to censorship and all that, but it also means that the strength of the US dollar is going to keep growing, and that could hit the EU really hard. I mean, there are also theories that, for example, the euro collapses and the entire eurozone gets dollarized, then the US dollar would be even stronger if the euro were to fall apart. Because when any fiat currencies collapse, the euro will definitely fall before the US dollar. That should be clear to everyone. What's also interesting in this context is that Peter Schiff is actually saying there's another reason to bring production back to the U.S. A lot of crypto millionaires are going to need jobs. So here, Peter Schiff is making a statement that inflation is rising, that people are lacking risk appetite, and that Bitcoin is going to keep tanking. And that's why a lot of crypto millionaires are going to need jobs, and it will help boost the economy again. And I don't know what he means exactly by that, but in any case, this was the statement from Peter Schiff, who, as a Bitcoin critic, is using every moment to give Bitcoin a dressing down. But hey, feel free to share your thoughts with me. Are you feeling bullish right now? Do you see it similarly to Larry Fink, that we're heading into a tougher period over the next 6 to 9 months, but then we could really take off afterward, potentially even entering a deflationary period? So, I don't quite see it the same way as Larry Fink. I can give you my own take in another video, but if I share my thoughts on that now, I think it would go beyond the scope of this discussion. But it's definitely very, very interesting what he's saying here. Peter Schiff actually said 2 days ago that he has now bought a TREZOR hardware wallet. If you want to buy a hardware wallet, I'll drop a link below for a TREZOR hardware wallet, the best hardware wallet on the market. Here you can securely protect your Bitcoin. With the code Bitcoin Hotel, you can also get a discount when you order a hardware wallet. So, Bitcoin Hotel is written all in lowercase, together. And if you still want to buy Bitcoin, if you want to be fully involved here, then I'll give you a link to 21 Bitcoin, how you can buy Bitcoin easily, safely, and simply, and especially how you can still benefit from the low prices. And here, you can also get up to 20% off the fees when buying Bitcoin with the code Bitcoin Hotel. Guys, I'll see you later. I'm on my way to the beach is right up ahead. Time for a swim. Catch you later, peace out.